Hi traders, it's Jay with thetraderinstitute.com. Just want to remind everyone that futures, forex, and options trading is risky and you can lose money. Therefore, you should only trade with risk capital. Please consult your financial advisor or investment professional before making any investments in futures, forex, or options. No guarantee of income or solicitation of futures, forex, or options or any other financial instrument is being made in these videos.
We get this, really significant bounce. We went as far through, I think, as 89.75. So maybe we're off, 4 or 5 ticks. But if you can call your, you're funny, really. If you can, have a level and, the market only goes through it 3, 4, 5 ticks, I mean, come on, that's pretty, the accuracy is very high, right? And so we come back up, we can't get up to 2100, we fail, we come back down again, and still we get this reaction, this playing around at 91, 93 quarter, and we finally push through to the downside, and we just kind of check it again one more time. You can see the tail on this 5-minute chart where we just tag it one more time, we go back down, we come back up again, we try to get to 90.75, we can only get to 90 quarter, and the market goes down. So, multiple chances, either on the long side around 90.75 or on the short side, to be able to take advantage. And so you see what happens next. We go down to the next level at 87. As soon as we hit 87, that's when we bounced up all the way back up to 90 quarter, okay? Then we come back through, we push through 87. We had a couple levels at 85 and 84 they weren't as significant. We pushed through them. We didn't quite get to 81 the first try. We got to, I think, 82 or 82 quarter. So again, within 4 ticks. And what do? We come right back up to 87 this time. Sorry, 87 quarter. There is a move down again of 4 points approximately. We come back up to 87 quarter again. We push through to, I think it was 88 quarter or 88.50, something like that anyway. So we only push through it 5 or 6 ticks, and then we go back down again. And we had 81 on our charts, 2081. And we were talking about the probability of us getting there during the regular session. And you'll recall, I said, well, we have our 2100, we've got our 2090. I said, if we get through 2090, there's a couple hiccups along the way, but 81 is going to be the significant level. And we finally got there, okay? Now, obviously, we pushed through quite a few points, really. There's 3 points, but the initial push was only 2 or 2.5 points. So within 7 or 8 ticks, okay? And then we push up, and basically what have we been doing? Around 81, we're just playing around it. And now that we're getting back above 81, 2081 here, where's our retracement expected to be? Well, at least to 84, 85, maybe back up to 87. So looking at the, I get these levels from the longer term charts. Looking at them, what do I see going into our session, the London session and U.S. session for the 22nd, Friday? What do I see? Well, 81, I'm not going to change it. Maybe I can make some slight adjustment, but that is going to be, that is still for me a do or die level. And if we stay below 81, then we should see much more significant retracement. In terms of the other levels, such as 2100 and 93 quarter, I'm keeping those 87 quarter. I still like it. 84 and 85, although not as significant, I'll keep them. 81, I'm going to keep that exactly where it is. So the scenario that I would like to see going into Friday's session is, now that we're back below 2100, I'd be very interested in 2100 as a level to sell against. Okay, 2100 and 2105, those would be interesting if we can get there. I think 2100 is probably going to be the wall. All right. Now you'll see on the chart that some of my levels are black, some are red. The black ones denote the levels that we feel are more significant, or what we term do or die levels, where the market usually will make a decision. And you can see that now that we've come back, we're above 81. You know, that's basically the decision point. And so I feel that based on what I see in the methodology, that 2100 quarter is going to be a significant level if we can get back up there. Otherwise, to the downside, I will share these. I'll share these with you guys in the chat in a moment. To the downside, we do have some very important levels to the downside, including 72 3/4, 66 quarter. We don't need to make any changes to these because we haven't got back down there yet. Beyond 66 quarter, then we'd probably be looking at 57 50. Okay, so I will post these levels in this chat, and for the benefit of the members too, I'll make sure that these get posted in the Swing Traders Club. One moment. Let me post these for you guys. Any questions?
Yeah, first target is off.
What? So quick?
Right, quick. Well, no, I mean I called the trade 7901, right?
Yes.
I put a pending order at 7901. It took it immediately 5 ticks. It did not fill my 5 ticks because it came to 5 ticks. It did not fill my first target. But that's that kind of accuracy we get if anybody's here with us for the first time. I called it a half hour ago.
Yep.
Right? I said 7901.
Yeah.
It came immediately 5 ticks bounce.
So easy to get your first profit targets off the table.
Yeah, I took manually 4 because it did not fill it. But I'm trading 3 contracts on YM, which is very little, but that kind of a accuracy you get with this methodology. And my stop loss is 5 ticks risk. It's 9096.
Awesome.
Go ahead, continue, please.
Okay, so I've posted those levels for you in the GoToMeeting chat here. So you guys are welcome to use those in your trading and just watch what they do. Okay, watch what the market does. You've seen how the market always seems to react around our levels just on this one chart, and you get the same thing on many other markets as well. All right, and so let's take a look at probably take a look at gold and maybe crude oil. I've got a crude oil chart in behind here, so let me bring that forward. Okay, let me move it over a little bit. 901 to the tick, yeah. Oh, that's too far over. Here we go. The data box. Well, I mean, what can I say, folks? Variations on a theme here. We had a level up at 44.57, okay? We didn't quite get there. We went as high as, what is this? Looks like 47. 44, 47, something like that, okay? And so we're basically in a consolidation zone before the before the crude open, okay? And then right at the crude open, what did we do? Look at 44.27. All we did was come back, tag 44.27, and then all the way down. Okay, my chart's here on Chicago time, so 8 o'clock, that's the crude open, okay, Chicago time, 9 o'clock Eastern. And so we just sell off right from there, okay? And we get some reaction around 43.34. We come back up, kind of play around a little bit above 43.47, and then we come back down, and you can see 43.12, and I think the low someone mentioned was 43.05. So we were within 7 ticks of the low with our level that was posted, almost 24 hours ahead of time. All right. So 24 hours ahead of time, we knew where the significant levels would be. We knew 44.27 as it's in black. We knew there might be some issue around 43.47 and 43.34, and we go to 43.12, and we only push through it. We get the big bounce off of it. We come back into 43.12 almost exactly to the tick, and we go all the way back up to, thanks, Simon. We are all the way back up to 44, obviously a psychological number. And then what do? We come all the way back down to 43.12 again, and look at the bounce that we get from it again, and look at where we are. So, you could say once is a coincidence. Yeah, go ahead.
Just a note. Good night, everybody. Jay, thank you for your help. If you took the YM trade, I personally will keep one contract running. I took already 8 ticks profit, 4 on 2, and I have one contract running with 4 ticks risk. And you can keep it running. 50 level is going to be your last point of defense, and you can take profits there. 78.50. Good night, everyone.
Thanks, Simon. Good night. Get some good rest. So looking at the longer term, I don't see much to change at the moment. We've come back into a continuation area on crude. 43.12. Obviously, it's still going to be critical. We need to get below that to see more downside action, in which case we'd probably go down to at least 42.60. So going into Friday, I don't see a lot to change. Maybe this 43.47. I do see something around this 60 area. So I'm going to just mark that off there, around 60. Was that 60 even, 57, something like that? Yeah, 60. There, that's what I want, 64, okay? So in terms of the levels going into Friday, it's still going to be the same to the, for the most part, okay? And then I'm just going to squeeze this in so we can, build a scenario here. So for now, the downside I think is going to be contained below 57, okay, and probably below 27 on crude oil. So to the downside, obviously we got to get through 43.12. If we can, we should go to 42.60. If we break through that, 28 is probably going to be a stumbling block, a hiccup along the way. But if we break 28, then we're going down into the 41s. Okay. Let me post these levels in here. Just making that one adjustment to the 43.64, 43.47. Let's make that 43.64. And oops, 64.